Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Kevin Davitt, Head of Index Options Content at Nasdaq, as well as Matt Cashman, Principal and Head of Investor Education at the Options Industry Council. And we cover capital markets from a variety of angles on Nasdaq Trade Talks, often focusing on the practical application of strategy and research, but behind the scenes is a well-developed framework that ensures the options business is able to operate seamlessly and continue to grow. It is great to have the both of you with us. Matt, let's kick this off with you. Briefly walk us through the important role that OCC and OIC play in this broader framework.
Oh, that's a great question and a great way to start this conversation. I think the Options Clearing Corporation is something that sometimes people don't necessarily understand its function. Part of what I do is to actually teach people how it works and what it does. So the Options Clearing Corporation is the largest equity derivatives clearing organization in the world. What that means is, and if you look at the slide that's on the screen now, what that means is that the two counterparties that are always inevitably involved in a trade are actually trading with each other, but they're trading through a central counterparty that removes the actual counterparty risk that exists in something like a bilateral trade or a swaps trade in an OTC marketplace. When you're dealing with a centrally cleared facility like the CCP or like the OCC in this case, the OCC becomes the buyer to every seller and the seller to every buyer. And so if, for instance, Jill, you and I were trading on the floor and I was selling and you were buying, the OCC would actually become the actual seller to your buy and the buyer to my sale. And so that's where the OCC sits within the broader landscape of the options business. And as you know, the volume that we're seeing expand very rapidly over the last 10 years is really a function, I think, of a very robust, centrally cleared facility that does its job every day in that way.
Mm-hmm. And Kevin, let's talk a bit more about Nasdaq 100 or NDX options, given that we've had a very big quarterly expiration this morning. What's going on behind the scenes that is contributing to this growth?
So I love that question. I think there is so much that we could potentially call attention to here, Jill. It's difficult to know exactly where to focus. You mentioned our quarterly expiration, which was significant from a notional perspective, because standard December options are listed well in advance. In NDX, you could trade December 2027 options currently. And in some recent conversations with bank desks and insurance-based clients, there is a real desire to trade even longer dated expiries referencing the NASDAQ 100. Now, those anecdotes aside, a week ago, NASDAQ Index team announced the annual reconstitution. You spoke with some of my colleagues about that yesterday, and I know you've covered it a bit. It happens every year. Following the third Friday in December, there's additions, deletions, and some rebalancing. For those that haven't heard, Palantir, MicroStrategy, and Axon Enterprise will join the NASDAQ 100. Illumina, Supermicro, and Moderna will no longer be part of the index. Now, I focus attention on the NDX options, and we've observed kind of a handful of compelling trends lately and this week in particular. So prior to Wednesday's sell-off, markets were being pulled along almost exclusively in the past couple of weeks by mega cap tech and Tesla, which is sometimes, consumer discretionary. Participation in the last leg of this rally was weak. So another way to put that is that market breadth was poor until Wednesday. Both realized and implied correlations were incredibly low relative to longer term averages. Now, for those potentially unfamiliar, correlation is the degree to which securities move in relation to one another or relative to an index. Realized correlation is backwards looking, and implied correlation is a forward estimate based on options that can be used to argue whether index options are cheap or relatively expensive compared to the constituent names. Now, that's a mouthful. There has been, subsequent to Wednesday, a demonstrable increase in correlation this week. And that's what tends to happen when you have a couple of like 2 or 3.5% moves. Underneath it all, NDX options volumes have been booming. I think that Matt could probably chime in on the industry-wide volumes and how they've potentially looked this year.
He
Yeah.
certainly Yeah, and Matt, that's exactly what I was going to ask you because we still have a week and a half of positioning to go this year. So what are some of the highlights from the clearing corporation's perspective? And if you can add on to, the growth that we've seen, as Kevin had indicated.
Absolutely. Like you said, there is a little bit of time left in 2024, obviously, but let me give you a little bit of a frame of reference as to where we stand now. As the close of business in November, we were looking at 11.1 billion of cleared contract volume for the entire year. Now, last year's total volume number was about 11.2 billion contracts. So we have all of December to add to that number before we get a final 2024 number, which in most cases, if you were to poll the most people in the clearing business would tell you that we're almost guaranteed of hitting a 12 billion, a 12 handle on the cleared volume number for the entire year. There's a couple of different stories that exist within that, though. And one of them is the interesting rotation of volume that you're seeing happen in the opposite direction that it happened after the meme stock craze of 2021, where you saw single name options, single stock name option volumes almost double over the course of those 2 years. What you've seen since then is that the actual rotation of volume has moved into the ETF and the index space and out of those single name options on equities that the meme stock craze kind of brought us to. And now what we're seeing is another rotation in the opposite direction in 2024, where you're seeing single stock equity option volume for 2024 up until November, up about 17% year over year. That equates to roughly 25 million contracts of daily average volume for the entirety of the single stock option volume. And then on top of that, you have index option volume, which is up about 7.5%, 7.7% year over year, and the ETF option volume, which is up about 2.5% year over year. So that gives you a pretty broad idea of what the volume is doing and where it's coming from.
Yeah, I mean, that chart certainly does help to, signify and conceptualize just how much the growth has been. Even if you just look into the past 5 to 10 years, you could see that step up. It's quite dramatic. Kevin, anything else you want to drill down into here as it relates to NDX options?
Yeah, I think Matt explained sort of the bigger, broader picture really well as far as the move into single names, into more macro options exposures, and potentially back a little bit more concentrated on the single name thing. What we have observed specific to NDX is that this sort of NASDAQ 100 complex has been leading the charge in terms of year over year growth for when you look at index options. So we throw a lot of numbers out here, but just relative to full year 2023, NASDAQ 100 volumes on average are set to pace up 39%. If we compared relative to full year 2022, average daily volumes in NDX are up 122%. Now, sake of comparison, S&P 500 index options should be up about 6% this year, and 39% relative to 2022. So Matt highlighted the 2 previous years where there was a very big move into index options. We have outpaced the overall industry there. My belief is that end users are increasingly looking for portfolio exposure, like at that large level, that resembles or tracks the NASDAQ 100. And I think a natural byproduct of that growth in AUM is the need for risk management, or in some cases, yield enhancement tools. And NDX and XND can really be used to craft that exposure over specific timeframes. It's been a really rewarding year for our team. And I, of course, appreciate opportunities to highlight this kind of growth with your audience, Jill.
Yeah, Kevin, remarkable job with your team this year. Appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.